Hello guys, Lance Martin here with Coldwell Banker Town & Country. Welcome to our April market snapshot of our 2024 real estate market forecast. Again, I am your host for the next half hour or so, Lance Martin, Coldwell Banker, and I put my little Martin Group logo down there. So again, Drew and Drake and myself, my sons, are the Martin Group, and we are here to help you with your real estate services. We finally have a date. So for those of you that have been watching, and I've been saying for 3 months now, we'll get a date and location for our market forecast. Well, we have half of it down, May 26th. Mark your calendar. We are going to be somewhere in Riverside. We are partnering up with the Inland Empire Regional Chamber of Commerce, and they're helping us with the location. And you might see Beacon Economics. They're also partnering. That's Chris Thornburg's firm, who's been our forecaster now for 10 of the last 14 years. It's hard to believe we've been doing the forecast for 14 years now. So we're about 6-7 weeks away. May 29th, it will be in the city of Riverside. I bet it's the Riverside Convention Center, but stand by and you'll be getting emails and updates on us as we go. So same QR code we've been using, that'll take you to the Lance Martin link tree, which will take you to the market forecast link tree, and all the data and everything we talk about is there. So what is in the news this week? Well, I've got a million headlines up here. This is all about the National Association of Realtors settlement involving these commission lawsuits and the Department of Justice. I'm going to do a full separate segment on this. We talked about it ever so briefly a month ago. So my audience for this particular thing is if you are a buyer or a seller and you're concerned about what's going on with that, or if you're confused about what's going on with these settlements and all of this, if you've ever sold a house, call us, call me. I will explain it to you. We will basically run through the entire program, and we're always here to help. So we'll do more on that, but it's kind of hard to avoid it right now if you're in the real estate market at all. Quite honestly, if you're a realtor and you're concerned about this, or you're not getting the information you need from your brokerage, call me, maybe I can help you out. Second thing that's in the news is rate volatility. I'm going to save that toward the end of our presentation when we talk about interest rates anyway. So let's jump in. So here we are in our Southern California market update. Price demand start. I put my eclipse slide up there. We just had the eclipse the day before yesterday, so I figured what the heck, we'll run with the eclipse theme here this month. So we're going to start with median price, LA, Orange, Riverside, San Bernardino counties. So we are up in all 4 counties or flat. Basically, the red line is Orange County up. We'll talk about what the numbers are. The blue line is Los Angeles County, basically dead flat. Green is Riverside, dead flat. And San Bernardino is the bottom line in that kind of that darkish gray color, up a little bit. So prices are up, all right? So that's the takeaway on where we are with prices, or I suppose flat. I'm not going to click into this chart. If you want to click in and see what those prices are, we've been doing that now for about 5 or 6 months. I was telling Adam just 10 minutes ago, I'm still struggling with if this is the proper way to submit this to you. The one thing I like about these presentations, especially if you get the slide deck, you can click in here and you can run your mouse across there. You can compare month by month, quarter by quarter, year by year. And this is a 5-year chart, but it goes back basically for the next one I'm going to show you. You've got 15 years worth of data in these areas. So what are we looking at here as it relates to pricing? So I'm going to come over here. I'm just going to highlight these positive numbers. These are year over year numbers. So March of 2024, which is now, today's April 10th, so last month, compared to March of 2023. So if you go look at the charts, LA County is up by 7% year over year. I tell you, that's a good number. If you talk about people that follow this and what's a healthy market, an appreciation rate of 2, 3, 4, 5%. Generally speaking, we kind of like that. The market's not too hot. It's not hot at all, but it's okay. Maybe keeping up with the price of inflation. That's a whole other conversation. Orange County, on the other hand, is up by 13.6%. Riverside 7.1%, and San Bernardino at 3%. So March to March, all positive gains. And by the way, if I just go back a slide, when I have these arrows here, those are monthly gains. So those months are just, hey, what did we do this month to last month? So the market went up or was flat in 2 of our 4 counties, and year over year, which again are these numbers basically up anywhere from 3 to 13.6%. Good numbers. It wasn't that long ago where we'd sitting in here and saying, my gosh, the monthly number is ridiculous and the year-over-year number is 20%. That's rough. So at least we seem to have stabilized that a little bit. I just went ahead and circled this one. This was a year ago compared to where we are today. So LA County was 888 last year, 950 today. Orange County 1.25, 1.38 today. Riverside County 579, 099 compared to 620, and 500 compared to 515. So if you want the deeper data, you can click on those other charts and it'll basically show you, actually this one as well. This is a 15-year chart. You click into that, it's on the link right below the video. If you're watching it on Facebook, or if you're on the YouTube channel or any sort of social media, the link will be there. Click into it and you can see the whole thing. I like putting the 15-year chart because it really, I don't know, really tells a story. I mean, all in all, we're marching along, a couple dips here and there. This is COVID and some of the corrections we had after COVID, and away we go. Supply and demand. So what is the supply and demand telling us? All 4 counties up with listed inventory. We've been talking about this, and this has been part of that equation. I've been saying, oh my gosh, when are we going to see more listed inventory? I just did a sit-down interview with Adam Schwartz, real estate agent in Riverside Market. He's a killer, great guy. And we spent a few minutes anyway talking about inventory and how that inventory is affecting prices. Well, inventory is up. It's not up a lot, but it's up, and we'll take it, okay? Now, the year-over-year numbers, however, LA County, it's actually down year-over-year. This is the monthly number, so my green arrow says more homes for sale this month than last month. The number on the box over there is comparing March to March of last year. So down in LA, down in Orange, up in Riverside, up in San Bernardino. Actually, San Bernardino is up 8%. I guess that's a green shoot, if you will. But in LA and Orange anyway, boy, inventory is down March over March, and last March wasn't so great either. This chart kind of shows it. I mean, this is almost 5 years ago, and if you just, the top chart is LA County, and this is where we were at the peak, at least within the last 5-year cycle, and this is where we are today. That's half. It's half the number of houses for sale than there were 4 or 5 years ago. That's a tough one. But again, the arrow is up. I'll take it. This is the deal, though. It's March. If the numbers are not going to be up in March, that's problematic. What we're seeing in our office for the first 10 days of April, again, today's April 10th, is we're starting to see the listed inventory pick up a little bit, as it should. 'Tis the season for that sort of stuff. So these are the numbers. The same numbers that I just shared with you over there as far as where the inventory was. But just to put that in perspective, let's just take Orange County, for example. 1,269 properties on the market as of the end of March of 2024. And if we just go back to 2021, it was 25, basically twice as many properties available in Orange County in 2022 than there are today. I'm certain in 2022 we were griping about low inventory numbers. So we still have this inventory lid. Here's your 15-year chart, and again, way back here, 2008, by 15 years, by the way. So wait a minute, 2008, you're going to compare this year to 2008? Well, okay, only because I got a 15-year chart. Massive amount of inventories. That was basically the peak or the top of our wonderfully painful, if there is such a thing, real estate recession, the Great Recession that we had in 2000. A lot of people say 2008. For me, it started in 2006. So, but at any rate, let's just say 6, 7, 8, 9, 10, 11, 12, 6 or 7 years worth of pain, and that was these years. But look at these inventory levels here, and even in this middle range, when I think we could say that the market was a little more healthy, and again, just look how low we are, even though we've got some upshoots here in this last month. So definitely low inventory. Now, this is the one that's a little bit tough. I always have pain with the sugar. So this is a 5-year chart on open escrows. Now, this almost seems to be a little bit in conflict. Inventory is up a little bit, prices are up a little bit, but actual sales in 2 of our 4 counties are down. Less buyers and sellers came together in the month of March than they did in the month of February. That is unusual. Normally, we start to see that trend go upwards. However, in the one shining spot is San Bernardino County. San Bernardino County actually was flat month over month. This is the, I think the next chart has the same slide. It does. This is the painful part though. So negative 23%, negative 17%, negative 14%, negative 20.9%. What are those negative numbers? Those are all a percentage of fewer transactions March of 2024 compared to a year ago. So again, if you're in the brokerage business, which I am, and if your numbers mirror those, well, depending upon what marketplace you're working, well, you did anywhere from 14 to 23% fewer transactions this year than you did last. So again, it's still a very, very tight marketplace. We'll see what happens. Last month was just an absolute cluster when it came to interest rates, the news in relation to interest rates, and I honestly think even though we saw more inventory and we saw prices go up, I think a lot of the buyers were trying to figure this out. Do I wait a little bit? Do I buy? This incessant talk, non-stop about, oh, there's going to be 4 rate cuts by the Fed. There's going to be 3. There's going to be 2. There's going to be all this stuff. You notice I skipped past my slide with Chairman Powell because I'm just tired of talking about it. Honestly, though, I think the market's kind of tired of worrying about it. It wasn't that long ago that I said a 7% interest rate breaks the market. Well, and we hit a 7% interest rate and the market broke. I think the market's been broken now for probably 2 years, maybe a little bit longer. But even though the market is broken, I believe, by the way, rates are 7. I'm skipping ahead. Rates right now are roughly 7%. But I believe the market started to heal itself in that the buyer community said, okay, fine. It's been a couple years. It is what it is. I'm tired of listening to it as well. I want to buy the house. I'm going to move on. So I hope my assessment is true. The painful part is purchasing power is less and payments are just higher. I mean, it's just what it is. So at any rate, so these are the sales numbers. The next couple charts give you those. This is a 15-year chart of sales numbers. Again, high, 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 high. And we're basically, when you have record low inventory to buy, well, guess what? You have record low sales. I'm not going to click into this, but these are all clickable. You can go in and drag your mouse and take a peek at it on your own if that's something that interests you. Okay, now I am going to click into these. I was out to lunch with a friend of mine, mutual friend of a friend, and we stumbled upon the Palm Springs market. And I thought, you know what? This, I think, is a good example of, I think, the mentality or maybe the thought process that a lot of consumers are going on. They read a headline and it says, this market is hot, this market is not hot, there's a problem. And I wish I should have inserted the newspaper article in relation to this. This was about 2 or 3 or 4 months ago. I believe it was out of the LA Times. And I'll tell you what I'll do. In between this post-production, I'll modify the slideshow and I'll put a link to that article so you guys can see it and you can put this in context. But it basically talked about challenges and concerns about the real estate market in Palm Springs. Was it overheated? Are the values going to basically crater? We're going to have a real estate problem with values in Palm Springs. So, and the best I can tell, it was very specific on a couple of properties that had seen some pretty dramatic price drops from what it was purchased for to what it was listed for to ultimately what it sold. So I said, I wonder if that article matches the reality. So I went to Palm Springs, and again, these are live. All those other spotlight cities are there too. I clicked in, and this is median price. By the way, this is 15 years of median price. Let me zoom in on this just a little bit. And obviously you can see as prices, way back in 08, and we're coming down. Let's zoom in here a little. Let's get a little bit closer to where we are today. And by the way, the month of March saw a pullback in median in the city of Palm Springs, which, by the way, 1.225 million. Okay. But the prior month was 1.285. But when you kind of take a look at this, okay, we had a little thing, something happened here. By the way, these are median prices, and sometimes you get a high one, a little low one, it kind of skews things. I could do average price, it would change it a little bit. But at any rate, this doesn't look too dramatic to me. Now, I guess if the guy writing the article was comparing April of 2022 at 1.4, and then said, well, wait a minute, what's going on in November of 2022, and we're at 887, I don't know, maybe there were some weird things going on there. But these things do tend to balance themselves out. So when I look at Palm Springs values, I don't know, this doesn't look to be too painful to me. So what else have we got here? We've got listings. So I click into the listing inventory side of Palm Springs. Again, 15 years of listed inventory. Again, we've got this big peak. I guess this is the third or fourth time we're referencing 2008. Every time I see 2008, I just go into shock. But obviously very large levels of inventory. And then you just see this erratic EKG going on all over the place. But even with Palm Springs, I mean, here we are, not a lot of properties. So only 112 properties for sale in the city of Palm Springs. These are residential, by the way. Residential properties as of March 2024. By the way, Palm Springs is pretty big. That's not a lot of inventory. But it went down. Last month it looks like pretty dramatic, but 173 to 112. So again, it's jumping around a little bit. I would have expected, quite honestly, to see listed inventory in Palm Springs rise in the month of March. But I'm learning the Palm Springs market. Maybe that's not such a crazy thing. By the way, if you want to do this, and if I just go back, let's take a look at March. I haven't done this. God forbid, don't ever do this when you're practicing in front of a live audience. But this is February 2023, 115 listings. Well, March went to 122, which by the way is pretty similar to what it is now. But if we went back, I would bet most months from February to March in Palm Springs inventory went up. This month it went down, which by the way, if inventory is going down and the demand is still solid, prices are generally going up. So I don't see anything crazy with the Palm Springs active listings. As a matter of fact, in many ways, they look just like everything else. And this chart is pending sales. So these are buyers and sellers coming together. Again, is this 15 or 5? Yep, this is 15 years of data too, and you guys can click on these. Now this is almost the exact opposite of what we saw in the Riverside, San Bernardino, LA Orange market. More listings, higher price, fewer listings, but this is what you're kind of supposed to see. Well, you're seeing more transactions come together. Not a lot of transactions though, but if you want to take a look in Palm Springs from a demand side, this is just the last few months, and it's just basically, I guess, the low. By the way, the lowest, I believe this is probably going to be on record. September 2023, 29 houses sold in the entire community of Palm Springs, the entire city. That's a small number. So again, maybe, just maybe, the author of the LA Times article, and that very well may line up with the data that they were looking at. They saw a little glitch, they saw a little bit of this, they saw only 29 houses are for sale, the market is cratering, Palm Springs is falling apart. Well, if it was falling apart, it fell apart for 1 month, and then it just seems to have charged back up to where it was. Just for giggles, how many homes did they sell a year ago? March of 2023, 70 homes. March of 2024, 78 homes. Still a small sample, but guess what? More than a year ago. So if you've got a community that maybe you've got some concerns with and you're like, hey, what's going on? Let me know. We'll do a spotlight. See, I just did this one totally randomly because the conversation revolved around there's a problem in Palm Springs. And you know what? Maybe there is. But based upon just some initial stuff, Palm Springs looks just fine to me. So I guess time will tell. We'll find out. So moving right along, interest rates. We're going to take them. I apologize for the banner up at the top. I could fix it, but it's not worth the hassle right now. So where are we with interest rates? This is the deal. This was last month's slide. The month before, we were below 7 with a 10-year bond at below 4. Well, we're not there anymore. The 10-year bond today, I think, is at 4.4. It's kind of broken this little barrier of safety. And a lot of people that follow this like, oh no, the 10-year bond is above 4.4. The world's going to end. This is the deal. I'm over it. I'll get to a slide here in a minute that will, I guess this is the slide that I'm going to get to. So this is a 6-month chart on interest rates, okay? I've got the 5-year chart. Yes, we were at sub 3. We went all the way up. But this is where we were 6 months ago. This is roughly Halloween of last year, okay? And it's hard to see on the screen. You guys can download this and take a peek at it. But the rates were north of 8%. That was brutal, okay? Oh, and by the way, since we were just talking about Palm Springs, when you take a look at that September window, we had extremely high interest rates leading up into that. They weren't as high as they were in October, but we had high rates. Maybe people just said, hey, I'm going to check out a little bit. Or maybe September's a bad month in Palm Springs. Got the snowbirds coming in, whatever it happens to be. But the trend has basically been down. So you've got a lot of people, myself included, who set their hair on fire and we get really exercised. Oh, these rates, what are we going to do when the market hits 7%? The market's broken. Well, I believe the market is healing, and what I mean by that is the buyer's like, hey, I want to buy a house. I need to move. You know, whatever's going on in my life, I need to buy a house. I can afford it. Yeah, it's 7%. If it comes down, great, I'll refi. If it doesn't, I won't. And I just honestly, I just think we've just kind of come to accept that this is where we are. I mean, this is just where we are, and this is what we're going to do. So having said that, the trajectory on these rates, and this is just over 6 months, is actually pretty good. So if the Feds do their rate cut, maybe they'll just even get that much better, and we'll be in good shape. So this is optimal blue. It's got a just below 7, 6.8. That's probably the best rate you would see. This is straight from the Google machine. It's got it at 7, comparable 7.2. And then the one that I love, and the link is there. This is the one I keep on my phone. So those of you who are really, really focused on this and want to see it every day, and you want to track it throughout the day, download this app from Mortgage News Daily. This was done this morning at about 6 a.m. 7.6%. And then I've got this little graphic circling. Oh my God, the 10-year bond is at 4.49. 2 months ago, it was like 3.8. By the way, the lower the 10-year bond, that's the one that tends to affect our interest rates. But hey, it is what it is. Click in here, you can get more information on it. So bottom line, I think the rates have kind of seen what they've seen. Our market forecast is set for March 29th. Certainly by the time we meet next month, we'll have the venue. Most of you are probably getting text messages or emails from me. You're on my database. So I would imagine within the next week, we'll let you know when the venue is. We'll put the pricing out there. We'll get the VIP tickets out there, the comp tickets for those of you that are on the VIP list. And we'll get all the rest of that. But we're super excited. We got a great lineup. We'll give you all the rest of that later. I am the Martin Group with Drew and Drake and Coldwell Banker. Our partner, of course, is Coldwell Property Management and Cobalt Escrow, and of course, Coldwell Banker. That's family, Coldwell Banker Town and Country. And we are done. So we will end on our little solar eclipse slide. Thank you for watching our April 2024 snapshot, and we will see you next month.